Very good morning, friends. Today we will be talking about one more candlestick pattern by the name of hammer. Now, hammer is a candlestick pattern which is called a bullish reversal candlestick pattern because it forms usually at the bottom of the downtrend and probably the trend then reverses. Usually, a hammer's body is twice as large as the lower wick of the hammer. However, this is an optics part of identifying a hammer, but this is not the scientific way. Today, we will be covering the scientific way of identifying whether the given candle is a hammer indeed. So, let's get going. Very good morning, friends. Today, we will be talking about one more candlestick pattern by the name of hammer. Now, this is how a hammer looks like. A hammer can have a very little upper wick or no upper wick at all, but it should have a very long lower wick. This is a bullish candlestick pattern. Now, the pattern mostly forms at the bottom of the trend. This is because since it is a bullish candlestick pattern, so the trend must be in the downward side for it to make the trend reverse and go to the upside. The lower wick of hammer is generally twice the size of the body or more. Now, this part is somewhat related to optics because there will be times when you will get confused with the optics as to whether this particular candle is a hammer or not. So, the scientific way of calculating the hammer is that the size of the low of the body to the high of the candle. That means from this part to the high, this should not be more than 38.2% of the whole of the candle. By whole of the candle means the whole size of the candle. That means from high to low. Now this 38.2% is also called a Fibonacci golden ratio. We will talk about this golden ratio when we cover the Fibonacci series in a separate video. But for now, just remember that the lower part of the body to the high of the candle should not be more than 38.2% of the whole size of the candle. Now, there is no significance of the color of the body of the candle. However, green colored body is generally considered good. I mean, you can completely ignore the color of the candle, but if it is green, it is favorable to the trader. One should not hastily act as soon as this pattern is formed, as always discussed. You should wait for the confirmation of the reversal of the trend by looking at the next candle which is formed, and then if the trend has actually reversed, take the trade, otherwise not. Now there are some indicators which I've already told in my previous videos that we will be completely ignoring them as of now. We will totally concentrate ourselves on the candlestick patterns, nothing else. And separate videos will be made available on these indicators. And then when you are fully prepared to take the trades, we will mix both these things, that is the candlesticks and the indicators, and then take the trades to make the probability more in our favor. Now see, this is the calculation which I was talking about, that the high of the candle minus the lower part of the body. If the candle is green, then the lower part of the body would be the opening, and if the candle is red, then the lower part of the body would be closing. So high minus lower part of the body divided by total length of the candle into 100, it should not be greater than 38.2%. Then only we will consider that candle as a proper hammer. Now these are some of the examples of the candlestick patterns. In this first example, the high made by the candle was 100, and that was also the closing. That is why there was no higher wick, and the opening was the lower part of the body which was at 90. So 100 minus 90 divided by the whole size of the candle. The whole size of the candle would be 100 minus the low of the candle, which is at 50. So that is 50. So 10 divided by 50 into 100, which is 20%. So this is well within the limit of 38.2%. Hence, it will be considered as a hammer. Same goes with the second candle also. Now see, the color has totally changed from green to red, but still it will be considered as hammer because the condition is getting fulfilled. In the third example, here the high made was 95 and the lower part of the body was at 80, and the total size of the candle was 95 minus 50. So this is 33.33%. So this also qualifies as a hammer. Fourth is also an example of a hammer only. Now we come to the fifth candle. Now over here you can see that the high or the opening, because it is a red candle, the opening or high that was same and was at 100 minus the lower part of the body, which is at 80. So that means this is 20 divided by the whole size of the candle, which is 100 minus 50, which is 50. So 20 divided by 50 into 100 is 40%. Hence, this will not be termed as a hammer. Now this is the hammer example in a live chart. You just need to wait for the confirmation candle and then take the trade accordingly. Now see, this hammer, it has appeared at the bottom of the downtrend, and once the confirmation that the price has started to rise, it is good time to enter into the stock for buying. And as already told you that indicators or volume we have not taken into consideration just for simplicity purposes. So you need to wait for the confirmation candle and the price should rise above the high of the hammer for you to take the trade. Once it crosses the high of the hammer, you can enter into this trade for buying purposes. Now the stop loss will be the low of the hammer. Here will be the stop loss, and do not exit till there is an exit signal. As already told you in my previous videos, we are considering only the candlestick patterns as our exit criteria. So we will focus only on this, and till the point we don't get any confirmation from the pattern, we will not exit the trade. Now over here, we are getting a bearish engulfing candlestick pattern, which is shown in the red circle. Now if we get the confirmation that we need to exit this trade, we will exit this trade at the next candle because the price is now not going up. If you enter this trade when the share was trading at 21 rupees and you exit at 35, there will be a profit of 14 per share, and this is around 67%, which is a whopping amount. I mean, this kind of return is unbelievable. So this was all about the hammer candlestick pattern. Once again, thank you so much.